Hi, good evening one and all. Welcome back to my channel. I have already finished chapter 2, that is risk management. So if you have not watched that video yet, please watch it first. In this video, I am going to start a new chapter, that is chapter 3. The name of chapter 3 is advanced capital budgeting. So now, without wasting much time, let us quickly jump into a topic of discussion. But before going into problems, I want you to understand this. See, there are two types of cash flows. First one is real cash flow and the other one is nominal cash flow. Now the question is, what is meant by real cash flow and what is meant by nominal cash flow? Real cash flows are cash flows without inflation. On the other hand, nominal cash flows are cash flows with inflation. So how to derive nominal cash flows? Nominal cash flows is equal to real cash flows plus inflation. Or else you can write like this: real cash flows into 1 plus inflation. And one more thing, please try to remember this format. How to derive cash flows? So there is one simple format: revenue minus cost. You will be getting EBDT. EBDT stands for earning before depreciation and tax. EBDT minus depreciation, EBT. EBT minus tax, EAT. And when you add back depreciation, you will be getting cash inflows. I hope that I am very clear till here. See, I am quickly revising whatever we have learnt till now. There are two types of cash flows: real cash flows and nominal cash flows. Real cash flows are cash flows without inflation. On the other hand, nominal cash flows are cash flows with inflation. So there is formula to find nominal cash flows when real cash flows are given. That is, nominal cash flows is equal to real cash flows into 1 plus inflation. For example, if they have given you real cash flows, how you will find nominal cash flows? This is very simple. Nominal cash flows divided by 1 plus inflation. And how to derive cash flows? In some questions, cash flows is directly given, whereas in other questions you have to find cash flows. So there is one format: revenue minus cost, you will be getting EBDT, EBDT minus depreciation, EBT, EBT minus tax, EAT, and when you add back depreciation, you will be getting cash inflows. Now we will solve one problem. With that problem, you will clearly understand this topic. So the problem goes like this: initial outlay of project. Initial outlay of project is nothing but cost, that is 80,000. Expected life or useful life is 4 years. Salvage value or residual value is nil. Annual revenue is given as 60,000. Annual cost other than depreciation is 20,000. Tax rate 50%. What we are expected to find? We are expected to find cash inflows. So here we have to assume two situations. One is without inflation and the other is with inflation. So we are expected to find cash inflows under both the situations. So the first situation is cash flows without inflation. If the cash flows are without inflation, it means there are real cash flows. Real cash flows are cash flows without inflation. For calculating cash flows, there is one format: revenue minus cost, EBDT, minus depreciation, EBT, minus tax, EAT, and when we add back depreciation, we will be getting cash inflows. In the question, they gave us 4 years and revenue of each year. Because the question is very clear, they have mentioned annual revenue. So the annual revenue means per year revenue: 60,000, 60,000, 60,000, 60,000. Cost is given as 20,000. So when you deduct cost from revenue, you will be getting EBDT, that is earnings before depreciation and tax, as 40,000 each year. Now, depreciation is not directly given in question, but we know one formula to find the depreciation. What is that? Original cost minus salvage value divided by useful life. Original cost or initial cost, one is the same, which is given as 80,000, and salvage value is given as nil, and expected life or useful life is given as 4 years. So the depreciation will be 80,000 minus 0 divided by 4. So 80,000 divided by 4 is equal to 20,000. So now here we will deduct depreciation per annum or per year is 20,000. So we will be getting EBT 20,000 each year. Tax rate is given as 50%. So 20,000 into 50% will be 10,000. 10,000, 10,000 and again 10,000. EBT minus tax, we will be getting EAT, earnings after tax, that is 10,000, 10,000, 10,000 and 10,000. And when we add back depreciation, we will be getting cash inflows. Depreciation we have already calculated, that is 10,000 per annum. So, 20,000 per annum. 20,000, 20,000, 20,000, 20,000. So the cash inflows will be 30,000 per annum. Now, my question is, are these cash flows real or nominal? Obviously, these cash flows are real cash flows because these cash flows are exclusive of inflation, because these cash flows do not include the element of inflation. I hope that I am very clear with first situation, that is cash flows without inflation. Now, proceeding to situation 2, that is cash flows with inflation. In the question, inflation rate is given as 10%. I already told you the format to prepare cash flows, or else the format to find cash flows, that is revenue minus cost, EBDT minus depreciation, EBT minus tax, EAT. When we add back depreciation, we will be getting cash inflows. There are 4 years. Now revenue in the question is given as 60,000 for the first year. Is this revenue inclusive of inflation or exclusive of inflation? The answer is this revenue does not include inflation. So we have to include inflation now. So 1 plus 10%. So we will be getting 66,000. 60,000 into 1.1. Yes, 66,000. For the second year, revenue will be 60,000 into 1 plus 10% whole square. So 1.1 into 1.1 into 60,000. It will be 72,600. There is another way to find second year cash flows. You can add inflation to first year. 66,000 into 1 plus 10%. You will be getting same answer, that is 72,600. And third year revenue will be 60,000 into 1 plus 10% whole cube. 1.1 into 1.1 into 1.1 into 60,000. So you will be getting 79,860. There is another way to find third year revenue, that is you can add inflation to second year. 72,600 into 1 plus 10%. You will be getting 79,860. Now fourth year revenue. $60,000 into 1 plus 10% whole power 4. See, if you are finding for first year, here I will write 1. If we are finding for second year, here I will be writing square. If we are finding for third year, here I will be writing cube. For fourth year, I will be writing 4. So 1.1 into 1.1 into 1.1 into 60,000. So it is 87,846. Or there is another way to find fourth year revenue, that is you can add inflation to third year revenue. Third year revenue is 79,860 into 1 plus 10%. Then also you will be getting 87,846. See, when you add inflation to third year, you have to add only once, because this third year revenue is already including inflation thrice. We got revenues of 4 years as 66,000 for the first year, 72,600 for second year, 79,860 for third year, and 87,846 for fourth year. So I'll be filling this format. For the first year it is 66,000. For the second year it is 72,600, and for the third year it is 79,860, and for the fourth year it is 87,846. Now we have to find cost. We have to add inflation to the cost. So we know cost is given in question as 20,000. So with inflation, first year cost will be 20,000 into 1 plus 10% whole power 1. So it will be 20,000 into 1.1. It is 22,000. Second year cost will be 20,000 into 1 plus 10% whole square. It is 24,200. Or there is another way to find cost. You can add inflation to first year cost. 1 plus 10%. Now third year, 20,000 into 1 plus 10% whole cube. $26,620. Or you can add inflation to second year cost. 24,200 into 1.1 or 1 plus 10%, one is the same. Now fourth year cost, 20,000 into 1 plus 10% whole power 4. 29,282. So we got costs with inflation. Here I am filling cost. For first year it is 22,000. For second year it is 24,200. For third year 26,620. For fourth year 29,282. So EBDT will be 66,000 minus 22, 44,000 for the first year. For the second year, 72,600 minus 24,200, 48,400 for the second year. For the third year, 79,860 minus 26,620, 53,240. And for the fourth year, 29,282, 58,564. Depreciation, we have already calculated depreciation. Depreciation is 20,000. Inflation is not applicable to depreciation. Please keep this in mind. So EBT will be 44,000 minus 20,000, 24,000. Here 28,400, 33,240, 38,564. Tax rate is given as 50%. So 24,000 into 50% will be 12,000. 28,400 into 50% will be 14,200. 33,240 into 50%, 16,620. 38,564 into 50%, 19,282. EAT is 12,000 for the first year, 14,200 for the second year, 16,620 for the third year, and for the fourth year it is 19,282. We have to add back depreciation so that we can arrive cash inflows. Depreciation 20,000, 20,000, 20,000, 20,000. So the cash inflows for first year is 32,000. For second year is 34,200. For the third year 36,620, and for the fourth year is 39,282. Now these cash inflows are nominal cash inflows because these cash inflows are inclusive of inflation. I hope that I'm very clear with situation 2 as well. Please go through with the situation 2 once. Please be very careful with inflation calculation. And please keep this in mind, inflation is not applicable to depreciation. I hope that I'm very clear with this example. If you have any doubt, please let me know in the comment section. I'll try to solve your queries. I'm concluding my session here. If you find this video useful, please do like, share and subscribe to my channel. Thank you.